What is going on, everybody, and welcome to another weekly update. And what I do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide a weekly analysis for entries and exits on the stocks that I am looking at. I also provide a daily pulse on the market at Hemi137, so you can check me out there. With that being said, welcome. Smash the like button and let's get this thing started. So, over the past week, we are starting to ramp up to the biggest week in earnings this week. Are you ready? As we are watching some incredible news despite what is being reported out there. I'm going to go ahead and preface this by already saying that what you need to understand is expectations are extremely low. We've had an outstanding number of earnings essentially beat, which is allowing the market to, or the stock to essentially explode to the upside. Or if you miss these low expectations, you essentially cause your stock to crater. But the thing that we need to be paying attention to is some very particular stocks or companies, because of the fact that they have a huge impact on the economy in general. And this feeds into our thesis, which I've always stated. You need to come up with your own thesis. You should have multiple sources, kind of put all the information together and have a general thesis on the market and where it is going over the next 6 months. To project too far outside of that, I think is too much when you are swing trading, which I typically focus on. I essentially do everything. I do intraday, swing trade, investment. I do it all. But ultimately, again, if you are doing any kind of short-term trading, what you need to understand is that you need to be aware of just the next 2 months, really, the events in the next 2 weeks. You need to dial it down to those specific events, as things can dramatically change very, very quickly. So with that overall thesis, that's what I kind of do with this video. And then I kind of dwindle it down to what events we need to be watching and specific events that could change or alter the direction of the market. And that's really what matters. So being said, let's go over this past week. We have a lot of information to go over. And then this next week, you're going to have to be prepared, because this is going to be one of the most biggest and historic weeks, I believe, on record. I think there's a lot of unforeseen things that are going to occur this week, because this is the last week before the election. So you're going to get tons and tons of news. And we've already gotten tons of news up to this point that is still solidifying our case for our thesis on this channel, and that things are about ready to take a wild turn here very, very shortly after the election. We've talked about this many times before, that once the election is done, essentially the belt is loosened. And at that point, the market can actually absorb a lot of what should have occurred probably about a year and a half, 2 years ago, when we essentially saw tech bottom out, which is now representing a large amount of the market's upside as of right now, when it comes to essentially just the weight that it holds with the Mag 7. So before we get too far ahead of ourselves, let's take a look back at the week and see what we've so far accomplished and where we're going into this week. Being said, let's do a little bit of earnings breakdown. Now, this is, again, I love this time when we start doing cycles of earnings, because of the fact that it gives you great insight into what's actually going on, as opposed to these data sets that are massively manipulated, especially over the past couple of years with the printing of the 40% of the money supply. Lots been hidden underneath the surface. And so when it comes to a lot of data sets that are being released by essentially official government the sources, and then ultimately understand, again, earnings is going to give you the greatest pulse on what's actually going on. So the earnings breakdown of the past week, we've had Tesla, which was a big one I was looking at. I've been talking about Tesla for quite a while. Again, they have a lot of great potential in a lot of different avenues. It's not just essentially a EV car company, which Wall Street likes to price it as that. It has been that for a while, but it's starting to transition. The view for Tesla was much broader than just the EV company from the beginning, but they needed to make headway and make sure that their cars were where they needed to be. And what we're seeing is massive decreases in pricing because they're a very innovative company. And now they're still, now that the essentially the establishment of the EV that they have generated, now they can start branching off to robo taxis and looking at essentially now humanoids, which is becoming big as well. And they have the facilities to do that. And a lot of these robotic companies, they don't have the facilities to generate the or produce these robots at a massive scale. And that in itself is a feat. But Tesla is way ahead of the curve, just like they were with EVs. And that's one thing you have to keep in mind. But the Cybertruck has reached profitability, which is incredible because they thought it would take much longer. But again, because they're so innovative that they've allowed, we've seen the price of the Model Y come down dramatically, and even the Model 3s, because they look to try to improve their process to reduce price. And we're seeing that with FSD. And now, though a lot of people aren't too happy that may have bought a vehicle a couple years ago, but ultimately understand this is what innovative companies do. They continue to drop prices and adjust to make their processes better and more affordable for uh, all the consumers out there. So that was great to see. And then they had a record 30.5 gross margin in Tesla Energy. This is one of the things that a lot of people just are not paying attention to. And then quite surprising is that their energy sector is growing rapidly, especially during a time when AI is becoming the new norm. On AI, humanoids, all these different things, you're going to need a lot of energy. And that is one thing to consider when you start looking at humanoids in the future. And another great feat for Tesla is that a lot of companies just don't have the energy units to be able to produce for their humanoids. And again, all those aspects of a humanoid, Tesla is already way ahead of everybody at this point. Now, it's not saying some company can't come in and do way better, but again, they are behind the curve, and Tesla has a massive edge on that already at this point. And so, again, listen to the earnings call for Tesla. Elon sounded much more positive. It was a much more positive earnings discussion than we've heard in a while. Elon may be a little bit tired because of all extracurricular activities he's been doing lately, but again, it was a great earnings call, and the fact that Tesla is a more positive sentiment, it actually caused Tesla to essentially almost recover the massive drop it's had down to roughly almost 200. I think it hit 202 at one point, or the 206 mark or something close to that just before earnings, and then it's been skyrocketed and recovered up to 260 since that point. So again, I think it has a very bright future. I think some of the worst is they're starting to make the turn, even though they didn't hit on everything. They had most beats, but again, ultimately understand, yeah, it's still going to be rough moving forward, especially during the economy and where the consumer is at. But again, I think it's one of the most potentially, they have a great future. I will say that. And again, depending on what happens in the next week, we'll see where Tesla could potentially be going. But as long as certain things align, I think Tesla could do extremely well. Now, some of the bad news. Bank of America, they closed 132 branches this year, which is the most out of all banks. And you wonder how some of these banks and everything still remain profitable, because they are continuing to essentially scrape everything down to bare bones. And whether that's banks have been closing massive amount of branches over the past 2 years, ever since SVB went down. Again, our banking crisis is still very much alive. It has never gone away. The thing is that they are masking it and not allowing banks to report because they're afraid of bank runs. Bank runs happen. That could be a complete collapse of our system. This is the delicate debt-based system. This is why you get points to where there's no liquidity, where they start capping loans, which is something else we've seen another bank do as well. Construction loans. They are trying to prevent the absolute collapse of the current debt-based system. And so you have to understand this is what happens. They'll cut branches, and yes, in the short term, it still looks good. They still look really profitable, but you push this out another year, it's going to look extremely nasty. And they can only do so much. So you have to start cutting rates whether you want to or not. Whether inflation is running up and unemployment is running up, you have no other choice but to start cutting rates. And this is why we saw a 50-point basis move. And everybody's saying, well, that was probably a mistake to cut because now inflation is coming back. And now there's talk of another 50-point basis move coming into November, which is, again, next week. So right after the election, you're going to start potentially get another 50-point basis move cut. And then understand the reasoning behind that. It's because unemployment is way worse than what is being reported. And we saw the revisions on that it could be well over 1 million job losses. People, you lose your job, you can't find a new job. And that's the biggest problem. And so as we get into some of these other points, you can see why. Now, the New York Community Bank, which essentially absorbed a lot of First Bank, I believe it was, a lot of their resources. They took on a lot of that, and now they have a net loss of $280 million. They fall about 40% pre-market when they announced that. And so, again, it's one bank that people have been eyeballing essentially, but under a microscope ever since that fall of First Bank, First Republic, something like that, of New York. And so ever since the fall of that bank, which has been about just over a year now, it's been under a microscope, and it's falling apart. They're essentially holding it together with duct tape until they can get it after the election. And then, like I said, at that point, you're going to start rapidly losing, which you've heard a lot of Fed members and everybody talking about. And they give such wishy-washy. You have one saying that is really great, and you have another saying it's not good at all. That we're going to start losing a lot of banks very rapidly, and that will happen here once the election is done. Then there's no point. You got to have those talking points before you can, essentially, once the election is done, they have your vote. Then at that point, it doesn't matter. And then you can just release all the information at that time. So. And then Apple cut iPhone 16 by 10 million units for Q4. You know how bad that is? You're going into Christmas and they're cutting massive amount of units just at the time when you need to be producing more, not cutting more. So that in itself was a huge statement that we have seen this past week. And then also, it should actually be a 5 here, I believe, not a dollar sign. So job postings have declined 27.5% year over year, lowest since January 2021. Again, there's a lot of ghost jobs. We've talked about this multiple times. It's continuing to get worse. I said it would get much worse. Even though they're cutting now, they're going to have to start cutting a lot more and a lot more rapidly. This is why the next couple of months are going to be extremely important on how this thing starts to change. I see nearly 50% of U.S. consumers perceive themselves as living paycheck to paycheck. 50%, half of the U.S. is living paycheck to paycheck. Again, I think it's even a higher number than that. People can't even afford $1,000 emergency payment. Again, with the introduction of buy now, pay later, you don't understand how much that is saving people that is not being reported. Again, you have so many very intricate and detailed information that is not being essentially reported, that it's extremely important to know where the consumer is at. And you just are not seeing that because you are not allowed to see that because there's an election going on. So massive problems. And then you got people saying that this is the golden era. There's another report that came out this week, which I don't believe I have on here, but they're essentially saying that it's the best time to be alive right now. And I don't know how you can say those two things with a straight face, because it is by far not even close to that. And the reverse repo facility fell to $238 billion, which is the lowest since May of 2021. Again, they are running out of liquidity. They're running out of money. They are spending at such a rapid rate, even though we're sending billions of dollars overseas and not even supporting our own country after those massive hurricanes, and then potentially getting another massive hurricane next week. So we'll see how that goes and how that plays out. But let's see, auto industry rates in the U.S. increased by 52% over the past 3 years. So yeah, that's great. Inflation has come down, year over year, but insurance has gotten absolutely absurd with the price gouging. And now I just went over this last week. Even they're talking about increasing insurance for homes in North Carolina for like 42%. And now you're dealing with auto loans. So now you're dealing with home insurance, auto loan insurance is all super, super expensive over the past 3 years. So these are all this kind of hidden expenses that people don't understand when they buy a home. That they, oh, well, I got to pay for HOA fees if you have an HOA, and then you got to pay for insurance for your home, because a lot of times it's required to have, especially if you don't put, I believe it's like 20% down in your home. So again, there's still a lot there that needs to be completed. And again, you're it's just sucking away all the costs, and then a lot of the everyday items that you're paying for are still very high pre-pandemic, and so none of that stuff's taken into account. But yet, it's a golden era. So with that being said, let's get into a little bit of housing. Existing home sales drop 3% in September, near the lowest level on record. 30-year mortgage rates is officially back to 7. So despite us cutting by 50 points, we are still up well over 7%, which is absolutely absurd and going complete opposite way. This is what I'm saying. A lot of things are so heavily manipulated that what it's doing is actually starting to backfire, which is not a good sense for the current administration. And again, very, very troublesome coming into the new year, because again, when you're not bailing everybody out, it's going to be an issue. Americans 65 years and older are the fastest growing group of homeless population, and by 2030 expect to triple the numbers. This is the largest working class that is getting ready to retire or has retired at this point, and are now, because of insurance costs, are starting to essentially become homeless. Now we're going to have massive, massive homelessness. And I've talked about homelessness in the last video as well, is that it's massively increasing at a rapid rate, because you have this older generation working class that just can't afford it. It's too expensive. If for some reason, especially a lot of people that may have retired in Florida, if essentially they have lost their home through the hurricane, then all of a sudden they can't afford insurance, because now insurance is almost up by like 100%, is more than your mortgage, and you can't, where are you supposed to go at that point? Then you have to move. And if you don't have another location, or if you only own that one home your whole life, and maybe you don't have kids, whatever the case is, you have nowhere to go. And that is a huge, huge problem. And there was already a big problem previously, because even in Florida, a lot of insurance companies wouldn't even cover you. So it was very a basic insurance. And so really, you're going to have to come out of pocket, and people can't afford to pay hundreds of thousands of dollars, especially when on a fixed budget and retired. And so again, major issue with especially the older working class moving forward. But hey, some good news. The NASDAQ essentially announces plans to extend trading for 22 hours a day. Yes, you only need a 2-hour break every day during the week. During the weekend, it'll be closed. But again, during the week, they're trying to get more liquidity. They're trying to get more volume by extending the hours. So we'll see how well that works out. But again, it's leading up to, there's a lot of problems with the system. And if you aren't seeing it now, it's blatantly obvious on how bad things really are, despite these headline news that come out and say this is the best time to be alive. And people are working 3 jobs and they still can't pay for stuff. And people are becoming hopeless at this point because it's so bad. And so this upcoming week, this is the week. This is a very, very big week, and you're going to get a lot of big news between this weekend and next weekend before you hit the election. There's going to be all kinds of data sets coming out. There's going to be all kinds of earnings, big earnings going out. And then you got the election and all the news associated with that. So it's going to be an overflow of information, if there ever was. And then after the election, I'm sure there's going to be some sort of fallout. So you have to keep that into account. And it's, again, very, very concerning about some things that have been essentially put into place already. And what I mean by that is this understanding that, again, what was it? The DOD essentially can now is authorized to use lethal force against Americans themselves. which was essentially dated back in, I think, September when that was approved. And so these are things you need to be mindful of. Again, if there's something that happens domestically, it can absolutely crush the market. And you need to understand that. And those are the kinds of black swan things you need to pay attention to moving forward. So that being said, again, not to completely steer off course, but again, that's something that's been brought up that you have to be mindful of. Upcoming week, we have the GDP coming out on Wednesday. Again, that might be revised. Again, you have these are really core sets going into the election. These will be the last sets going into elections, so you need to be mindful of these, how much impact they will have. It's a really big week, so we'll see how much actually impact they will have, because you have Apple and Amazon and Microsoft reporting this week, so you've got a lot of big earnings this week. So the GDP drops on Wednesday. You got core PCE, which is again more intraday, but it does give us great insight into what could be happening with the core. Again, expecting these things to be manipulated in some sense. Again, the core CPI typically has a lot more weight on a lot of different things. So this kind of gives us insight into that. So we'll see how this isn't as heavily manipulated as the core is, because the core holds more weight. But it's still interesting to watch and see what happens there. And then again, you got non-farms on Friday. So you got a really big jobs report on Friday. If for some reason that's bad, which I'm expecting them to pencil whip it so it doesn't look bad going into the election, because that's the last thing you need. Be a big Friday there in general. And then upcoming events. Obviously, you have the election, which I don't have it listed here, which is on the 5th. So we got 1 week out from that. That's going to be huge. And then monetary policy right after that. So you need to keep that in mind. And then upcoming events, you got monetary policy will be big, and then core on the 9th. So you got a lot of stuff reporting next week during election week. So that will be very big. We're going to review the calendar. Again, there's massive earnings this week. So if any of them do bad, it could dramatically swing the market. So just keep that in mind going forward. As of right now, banks are obviously, the expectations are so low. They're trying to keep it propped up by keeping the expectations very low. And again, a lot of them just aren't reporting forward guidance. So again, you can start selling off pretty heavy if things look bad. So much so that the expected moves, again, we're getting in high territory here with SPX, because you've got a lot of stuff going on. So the general index is very high. So again, it's not really a week to be playing options. You can play individual companies would help, but ultimately understand you want to kind of play the sediment to that. You don't want to play the direct stock in itself, because they are pricing in so much that essentially you're just burning money if you play options this week. For majority of the stocks, you have to try to get that sediment play as opposed to a direct play for earnings play during this week, or wait till after they report and let the prices adjust on the options before you start diving into quickly. So again, very high. Tesla is very high at 18, because again, they started moving. They haven't moved this way in a long time, since 2020. So they are getting massive momentum there. So we'll see what happens with Tesla this week. Boeing is about normal. They're such a hot mess. They're pretty much giving up their space program because they've had so many issues. I wouldn't know anybody who would want to fly in one of their rockets anyway at this point, especially being left and abandoned out in space is kind of horrible thing to see. And then you have Elon that's trying to save everybody, and they want to put him behind bars. So we'll see how that goes. But being said, and then JP Morgan's high at 5. Again, it's typically sits around 4 and really doesn't move much unless it's actually reporting earnings. So the fact it's up 5, again, very concerning. They're expecting something big to happen this week, and you have enough earnings, heavy weighted earnings, for that to happen. And so that's what's important. And then along with all the other news that's currently floating around the election as well, it's going to be a hot mess. So with that being said, this is the Super Bowl of earnings. We have massive earnings going on this week, and it's going to kick this thing off. And again, you are leading straight into the election, which is going to bring a lot of news in itself, a lot of massive news. So not only are you getting some of the most heavily weighted companies in the market, but you also have the election, what's can dump some other horrifying news that may sway the market. So these are all things you need to really be paying. We're coming down to the wire at this point. So on Monday, I'm not really seeing anything. Again, you have a lot of banks. Banks are going to be important, especially the smaller banks and what's being reported. Once the election happens, I think you're going to get a lot of information on banks and a lot of bank failures from that point. They may try to push it out to the new year. Uh, they'll try to. We'll see how well they've done so far. We still lost another bank. New York Community Bank is about a bad move away from absolutely just being abolished, and it should have probably already been. But I think there's a lot of support there to keep that bank up, especially because of the light that's been essentially shined on it. So for it to be interesting to watch on Monday after close again. A lot of these cars are reporting, like GM said it did really well. I don't believe any of that. People are taking some crazy loans out, and I've talked about this already. They're doing everything possible to get essentially these cars moved off the lot because they're just not moving. So people are getting horrible deals on vehicles, and somehow they're still going for them because they need a vehicle. And it's not really an option if you're working. You need a new vehicle, and so or not a new vehicle, but you need a vehicle, and it's very expensive, especially with insurance, that you need prices to come way down. So whether that's extending your loan period out, and people aren't putting like any money down, that this is something they've talked about is having 40-year mortgages as well. So there's a lot going on to try to make these look better. And you're seeing what's happening. The adjustments are made behind the scenes, whether it's closing branches, trying to lay off as many people as possible. If you don't want to come into the office, then you can consider yourself with no job. You can quit, but you need to be in the office so we don't have to pay severance packages. These are all kinds of things you need to pay attention to that are occurring that aren't getting a lot of light shed on them to show you what's really going on. So Tuesday will be a massive day. Normally, Tuesday, Wednesday, Thursday are typically huge days in the market when you start reporting. And as you can see, there are tons coming in Tuesday morning. SoFi will be a really big one. PayPal is a big one. I've been talking about these two a lot. A lot of big potential future here with SoFi, and then PayPal with a new CEO. It's already started to rip up. So we'll see how well they hold, but expecting them to do well moving forward. And then you got BP, which would be okay. McDonald's had a lot of information coming out, especially because of the whole Trump thing at McDonald's. All of a sudden, the next day, it apparently had some bad onions or something, and then now it dropped. It dropped quite significantly. So we'll see how well they do here moving forward. The Pfizer CEO, I believe, actually just resigned this past week too, and they have earnings. So that is interesting to see. So Pfizer will be important to watch this week. See what information comes out of that. Some of these other ones we'll have to see how they do. AMD will be a huge one, especially with the competition with Nvidia. They still have a lot of room, but I really like their CEO, so we'll see how well they do this week. Be an important one to watch, especially because semiconductors have done very well. Google obviously will be a very important one to watch. Advertising will primarily will be interesting to watch because people aren't buying, so that the number of advertising has gone down quite significantly. So we'll see how that does well, especially because YouTube is heavily based on a lot of ads. So we need to watch and see how they do there. Snap, for some reason, they've been, I don't know how they survived, but they were really promising until Apple essentially cut them out. But they're back and forth, but they've held a quite significant amount of weight for whatever reason. So it'll be interesting to watch and see how Snap does. Chipotle, now that with the change in CEOs, we'll have to see how well they do. Visa will be extremely important to see where credit is, charge rates, those kinds of things will be extremely important to watch on Visa. So expecting them to actually do well, but they're going to have to make some adjustments. And something the CEO has been talking about to this point is they have to make adjustments and start capping people because people can't pay these payments, even the minimum payments. Then understand essentially the rates on these things are so far up by like 25%. So if you're making minimum payments, it's not doing anything because essentially your the rates on these cards are well over that. And so if you're minimum paying, you're not you're essentially going further and further in debt with the rate at which this is at, and we are in reaching critical levels of debt and this personal debt that is mind-boggling how this current economy and the spending is going on. So, but again, don't want to sidetrack too much. But ultimately, again, I think Visa will be a really good one to be watching there. Wednesday morning, Caterpillar will be a good one for construction. Like I said, one of the big banks is cut on essentially new projects. They've capped it at 500 million. So we'll see what happens with that. That'll be interesting, especially when you're getting into a depression like state. This could do very badly. So we want to watch CAT on Wednesday morning. And then obviously after close, you got Microsoft, Meta, Coin, Robinhood. Robinhood's been looking quite interesting, something I might actually look at potentially investing in. So I do really like Hood at this point. One of the changes that they're making, I do not like the CEO, but again, what their innovation in especially exchange and everything else is kind of looking promising. So we'll see how well they do here. So it'll be a big Wednesday afternoon here. Moving forward, Etsy could be a good one. Consumer weakness for that one. Roku could be doing well because of cheap entertainment. So that'll be Carvana, expecting that to get crushed. And then you have Starbucks expecting that to get crushed. I do like the Chipotle CEO coming over, but it's going to take some time to get that fixed. I think about this time next year, it might be starting to get in the right process. But again, you're facing a very weak consumer, so you have to be very careful with that one. But I do really like Starbucks, potentially in a couple months. Then Thursday, Uber, expecting that to do well. The problem with that is that they are price gouging at this point, and so they're going to have to be very careful. I think at some point you might hit a little bit of deflation on Uber here, so you need to be careful. I'm not watching Peloton. I think they're going to get wrecked. MasterCard, another one. Would be a good one to watch. Estee Lauder would be a good one to watch. And then after Thursday, Amazon, obviously, that's going to be a huge one, and Apple, both reporting on the same day. So expecting the way this is set up, I would assume that they're expecting Amazon to do very well and Apple to do very bad. Now, Apple holds about 7% of the index, so if it sells off, if Amazon can absorb some of that, that's why you kind of got all this planned out on Wednesday because of AI. I think if you have Microsoft and Meta do well, that will pump the market up, and then potentially Amazon help pump the market up to potentially hold this up, because the only thing that's been saving Apple is essentially the buybacks at this point, and that's all that's really been helping it. Because it's been doing horribly bad, and yet it's still up where it is. And so it's been like artificially pushed up, although NVIDIA did surpass Apple this past week. So that's something to keep in mind. So expecting any AI infrastructure to push this up, and then Apple is just not innovating. It's falling off. It's not the Apple it used to be 10 years ago when it had its market share, or over the past decade. It's just been rampant, and they haven't been very innovative under Tim Cook. So we'll have to see what happens there. Fubo is typically a big one a lot of people like. Not really watching that, but that may get some push on Friday. Then get some oil energy plays on Friday. But again, a very, very big week we have to be paying massively attention to. Again, you're going to get flooded with information this week. You have to keep that in mind. It's going to be a lot of information. It's going to be hard to keep up. You can check me out at Hemi137, like I said, on X. I'll stay pinned to the market and give you some insight on what I'm seeing on these earnings. And again, you're going to get tons of information on stuff. We've gone over a lot of the scheduled stuff, but you're going to get a lot of information that just is not scheduled, and you're going to have to be paying attention to. So again, a huge week on deck going into essentially the final week before elections. So you have to keep that in mind. We don't know what else could be dropping this week, but you can almost guarantee that there will be some other information outside of that that you need to be mindful of and reduce risk of what could potentially coming, at least till after the election. I'm not saying you can't take intraday plays during this week. If you can, options aren't the greatest to be playing this week. It'll be a little difficult. So either equities or potentially futures. Futures may not be worth playing either because of the fact I think there'd be a lot of volatility in the market in general, especially if you get a lot of bad earnings or looking for hopefully some mixed, so that way the market kind of levels out and it doesn't just start getting rug pulled. We'll see how that plays out, but nonetheless, it's quite interesting and a huge week on deck. So, with all that being said, if you did enjoy this video, remember to go ahead and drop a like. Until next time, I'll see you guys later.